What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kawatmi, got mortgages. Happy Tuesday. Man, we have got so much to cover. A lot going on in regards to the market, right? Of course, Senate is voting as we speak on the government shutdown bill, or I should say the House. Senate voted yesterday. We could see here, literally as of right now, it looks like one Democrat already voted yes, which is awesome. The House chair from Jared Golden from Maine. We'll start obviously seeing some of the difference as we start continuing to see this unravel. Again, before I dive into last week's, what's in the deal? The biggest thing is again reversal of government employee layoffs. I mean, we're starting to see a lot of different. It's pretty crazy how much of an impact flights took. Right, when we talk about air traffic control. One of the biggest things that we know that is not in the deal is the guaranteed extension of health insurance subsidies. I know that is something that Democrats were obviously pushing for. We know, again, as we saw here when they started voting, again, the House Speaker speaking, and then these are a little bit of backstories, right? So, super important, right? Trump plans to sign the bill, again, ending the shutdown hopefully shortly. Keep you guys updated on that. Now, speaking on the market, we know last week was employment data, and it was just super short, right? We didn't get too much information when we saw um, on the employment market, right? We didn't get the JOLTS report, job opening labor turnovers. We didn't get the BLS report, but we did see, once again, a little bit of slowdown on the ADP report. Let me make this bigger for us, and we will actually see as we start seeing private growth, right? Rebounded, again, continues to remain modest, but jumped up 42,000. I'm going to talk about what the weekly ADP report came in actually showing losses, but again, from a monthly basis, right, they added 42,000 jobs in October, makes it even bigger. According to ADP, 24,000 gain, exceeding that expectation, which again, in my opinion, makes no sense. But then again, we started seeing a little bit of a positive turnaround, of course, in the last 2 weeks of job losses. Now, what I want to pan us to while I'm on this topic is, our friends at MBS Highway went ahead and actually shared that some of that data that they actually shared kind of doesn't make sense because the weekly ADP report actually showed that over the last 4 weeks, ending in October 25th, there was 11,250,000 job losses on an average per week basis. So again, kind of confusing where ADP goes and says that there's 42,000 job gains, but then the data pretty much contradicts a lot of that information. So again, kind of shows a little bit of difference of where some of the reporting information is going. Of course, kind of keep you guys updated on that. And then, of course, we know, again, on the government shutdown person, CPI, September CPI report was released. We know that. October, again, supposed to be released tomorrow, but it's probably not going to happen due to, of course, the government shutdown. So another month where we're going to be flying, quote unquote, blind. And again, because of this shutdown, we're probably not going to get on December 10th. We're going to get about a week later. So pretty interesting, right? I can even attest to it, how I've noticed it myself, how I'm usually always coming on here sharing with you guys updates on inflation, unemployment. I'll be honest. I mean, almost for the last 2 months, I feel like I haven't been giving us updates on employment and inflation. I started second guessing myself. And the reality is just no information to update us on, right? And if there is, it's very brief info from a private side that, is taking some weight, which is why we're actually seeing the bond market move favorably today because of this information, right? You could see here it went up 13 basis points and you could kind of see throughout the day, right? 10-year treasury, of course, slightly up, bond market slightly up as well. So super interesting to see some of those different transitions. But again, BLS report was supposed to get released on October 3rd. We know obviously we did not get that. Being pushed again 3 to 4 weeks. The November report might again be scheduled for the 5th. Of course, that data is probably going to get pushed again. We talk about PCE, personal consumption expenditure report, for September. Supposed to get released in October. Of course, now that's getting pushed into probably later November, if not likely even further than that. Again, Fed meeting is going to be December 10th. I don't think the Fed is going to do anything. I think it's going to be important for us to see that. I actually did not check where is the FOMAC Fed Watch. Let's actually check that out together and see what is the likelihood of us seeing a potential cut. Let's go over here. So looks like we're still at roughly a 60%. I'll share with you guys. I want to say earlier, not that long ago, we actually were at a higher percentage of a likelihood of there being a Fed cut at 60% right now. I don't, again, know. I don't really anticipate the Fed to go ahead and cut again in December. I think we just don't have the necessary information to support that. So we'll kind of see how obviously that goes. Cotality, once again, we look at Cotality, we're still showing a modest gain of 1.3% from an annual gain basis. We know home values based on them, we're anticipated to rise 4.1% on a month to month basis. And then we continue to take a look at new home sales from this perspective, up 739,000 month over month, up 10.6%, 5.6% on a year-to-year basis. Again, clearly showing months of supply actually on a downward trend, right? Which is important for us to look at. Right? Again, a lot of the different information we know. I'm not going to get much. We will get some updates on home price appreciation. We will also see the 10-year Treasury auction, which again happened today. That's one of the also reasons why the bond market reacted very favorably, and we'll take it from there. Now, let's kind of take a look at how interest rates have been doing. We kind of reverse course a little bit, and we're slowly back to where we were prior to the Fed cut. I'll take a look at it right here. You could pretty much see, let's go like that. Let's go October 1st, 2025. Kind of bouncing, right? Well, luckily, a lot of our clients locked around here. Those who did not, we got a little bit of up, then a dip, then up, then dip. And look, battling the ceiling, it looks like 6.25 to 6.3. As you can see here, we're one time we're up 6.3, then 6.2, then 6.3, then back to 6.2. We're back on that downward trend. Not much data that is out there that is going to kind of probably move us in the opposite direction. But important for us to obviously take a look at some of these things to just see, most importantly, what are the various different things that we want to take a look at. Second to last thing I want to talk about, and I shared actually a different video on this, was the conversation between the 30-year and the 50-year mortgage. I'll be brief on this just because I went over this before, but an example we took, this was a $500,000 home, client putting 5% down, taking a look at the difference in terms of monthly payment or cash to close. Again, I am not a fan of the 50. I agree from a monthly payment perspective that it drops it. Just the total interest percentage is pretty astronomical in my opinion. Yes, you could refi later. Can it open doors for some homeowners? Of course, but not really too much of a fan of a 50. But again, I always relate it when I explain this to people who are getting cars, right? And they're financing a vehicle. They're at a 4-year, which was a typical norm. Nowadays, you get 6, 7, 8-year vehicles. So lowest monthly payment, again, obviously option 2 would be the 50-year at the 500,000. The payment would be about roughly $3,995. That lowest cash to close being roughly about $38,000, and then kind of taking it from there. Now, if we look here, the true cost comparison, right, 6.25 versus 6.75 on the 50. Obviously, I say the rate's a little bit higher. You can see the difference in the monthly payment, principal and interest payment only. Roughly about a $240 difference a month. Not terrible, right? And you can see here again, principal and interest. That's my main thing, right? Because I always say HOI is going to be higher HOA alongside with the taxes. So roughly about $1.32 if you factor that in. Lowest cost analysis, again, you're going to see roughly a $26,000 difference, more or less, between the two. You're going to see here loss of roughly about $48,000 of equity between the two after the 30-year, of course, mainly because one side is paying more interest than the other. And then, of course, estimated home value growth. Home value, as you can see here, at 10-year would gain about roughly $261,000. Remember, we were sharing $361 in equity minus a down payment, of course. Okay, so a lot of different things for us to take a look at, right? And it's so critical for us to make sure that we bear in mind some of these things, right? The market is going to continue to move. Rates are going to go up. Rates are going to go down. Values, of course, have been on a pretty consistent trend, which is great. Make sure if you're somebody out there, you're keeping that in mind because those are the things, right? Nothing beats the power of real estate. Nothing beats the power of appreciation from home. So if you're somebody out there who's considering to buy or purchase, make sure you guys keep in mind, this is actually going posted on our YouTube channel. We are about to hit our 600 videos for our YouTube channel since I first started in the business, just over 7 years and change. So super excited for that. Super excited to continue dropping knowledge, sharing the necessary information that we need to continue making homeownership possible. Appreciate you guys jumping on as always, and I look forward to connecting to you soon. Have a great day.